Hi friends, welcome back to FinveStocks. Today we are going to see 10 top picks for Muhurat trading. So before that, we will just see what is Muhurat trading. The oldest exchange in India, the Bombay Stock Exchange, started the ritual of Muhurat trading on the auspicious day of Diwali way back in 1957. In 1992, the National Stock Exchange (NSE) adopted the practice of Muhurat trading, and since then, it has been a norm for both stock exchanges. Among the Indian trading community, Muhurat trading on this occasion of Diwali is considered auspicious, as it is believed to bring wealth and good luck all the year round. The Indian stock market also opens for 1 hour for the trading of stocks every year on Diwali. This yearly ritual is known as Muhurat trading. So the Muhurat trading for this year is on October 24th. Timing is 6:15 p.m. to 7:15 p.m. So don't forget to buy your favorite stock on this occasion. So if you see the Muhurat trading performance, in last 10 years, market has managed to close positive on 6 occasions out of 10. So now let's see the Muhurat pick of 2022 by FinveStocks. We had selected 10 companies from various sectors across large cap and mid cap. See each one in detail. The first stock is from financials. It's Bajaj Finance Limited. If you see company snapshot, currently the company is trading at a price range of 7193. It is having a market cap of around 4.35 lakh crores. The stock is trading at a PE of 43.9, which is well above the industry standard of 25.3. The company is having a book value of 794 rupees with a dividend yield of 0.28, which is okay. The company is having ROCE of 10.3, whereas ROE is in the range of 17.5%, which is very good. The company is having a debt to equity ratio of 3.81. As the company is a part of financial sector, we need not to see the debt to equity ratio as their business runs on borrowings. If you see the pledge shares, the company doesn't have any pledge share, which is positive. The sales growth of the company is around 30%, whereas profit has grown by 100%, which is very good. The ROCE for last 3 years is around 10.4%, whereas ROE for last 3 years is around 16.6%, which is good. So the company is delivering consistent ROE across last 3 years. If you see the sales growth and profit growth over last 3 years, it is showing good returns of around 20%, which is very good. The company is having net cash flow of around 1500 crores. Bajaj Finance performance over last 5 years, it has given a consistent return of around 293%, which is very good. The second stock on the list is again from financials. It is ICICI Bank. It is one of the largest private bank in our country. If you see ICICI Bank snapshot, the company is trading at a price range of around 907 rupees. The company is having an overall market cap of around 6.32 lakh crores. The stock is trading at a PE of 21.3, which is above the industry standard of 16.2. The book value of the company is around 262 and dividend yield is around 0.55%, which is very good. The company is having an ROCE of 5.59 and ROE of 14.8%. The company is having a debt equity of 6.82. As the company is in financials, we need not to look into debt to equity ratio as the company works on borrowings. The company doesn't have any pledged shares. The PEG ratio is around 1.08, which shows sufficient room for future growth. If you see the sales growth is around 15.1% and the profit growth is in the range of 40%, which is very good. ROE for last 3 years is in the range of 12.4%, whereas ROCE for last 3 years in the range of 5.72, which is okay. Sales growth for last 3 years is around 10%, whereas profit variance is around 80.7, which is very good. If you see ICICI Bank's stock return for last 5 years, it has given solid return of around 240%, which is very good. And currently, the stock is in an uptrend, which shows good upward moment in coming years. The next stock on the list is an IT giant. It is the leader of IT sector. It is Infosys. Infosys Limited. Currently trading in the price range of 1500 rupees and it is having a market cap of around 6.31 crores. The stock is trading at a PE of 27.6, which is above the industry standard of 25.3. Book value of the company is around 190 rupees and dividend yield is very good. It is around 2%. The company is having ROCE of around 37% and ROE of 29%, which is very good. The debt to equity is around 0.08. The debt is negligible. It doesn't have any pledged shares, so that is very good. The sales growth is around 23% and profit growth is in the range of 10%, which is okay. The company is having 3 years average ROE of 27.2 and ROCE of 35.1, which is very good. The sales growth for last 3 years is around 13.7%, which is very good. And the profit growth is also in the same range. Now let's see the price chart of Infosys for last 5 years. It has given a return of around 223% in last 5 years, which is very good. The fourth stock in our list is again from IT sector. It is a top IT giant in our country, TCS, Tata Consultancy Services. Now let's see the snapshot of Tata Consultancy Services. Currently, the company is trading at a price range of 3,137. The market cap of the company is around 11.4 lakh crore rupees. The stock is trading at a PE of 29, which is above the industry PE of 25.3. Currently, the book value of the company is around 266 rupees and dividend yield in the range of 1.37, which is very good. The company is holding good ROC and ROE. ROC is in the range of 55%, whereas ROE is in the range of 43%, which is very good. The company is having almost negligible debt. The debt to equity ratio is around 0.08. And company is having very negligible pledged shares. It is around 0.48%. If you see the sales growth of TCS, it is in the range of 16%, whereas profit has grown by 8.27%, which is okay. If you see ROE and ROCE for last 3 years, ROE is in the range of 40%, whereas ROCE is in the range of 50%. Both are very good. If you see average of last 3 years sales growth, it is around 10%, whereas profit has grown by 7%. Now let's see the price chart of TCS for last 5 years. Company has delivered an overall return of around 143% in last 5 years, which is okay. If you are new to this channel, please do consider subscribing this channel. Also don't forget to like, comment and share if you like the video. So the next pick on the list is from the FMCG sector, that is Hindustan Unilever. HUL. Hindustan Unilever is trading in the price range of around 2,654. The company is having a market cap of around 6.23 lakh crores. The stock is trading at a PE of 64.4, which is above the industry standard of 60.5. The company is holding good PE because of good ROE and ROCE. Dividend yield of the company is around 1.28, which is very positive, which is very good. The company is having ROCE of around 24.4% and ROE of 18.4%. The debt to equity for Hindustan Unilever is around 0.02, which is almost negligible, and the company doesn't have any pledged shares. If you see the sales growth and profit growth, it is almost in the range of 15%, which is very good. If you see ROE and ROCE for last 3 years, ROE is in the range of 30%, whereas ROCE is in the range of 38%, which is very good. The company has shown good sales and profit growth for last 3 years in the range of 10%, which is also a good parameter. If you see HUL's growth for last 5 years, it has given a consistent growth of 100% returns over last 5 years. So it has doubled its stock price in last 5 years, which is okay. Next is the sixth stock of our list, that is from the chemical sector. The company's name is Pitlite. Pitlite Industries. Pitlite is currently trading in the range of 2,638 rupees. It is having a market cap of around 1.34 lakh crore rupees. The stock is trading at a very high PE of 100, which is well above the industry standard. The industry standard is around 26.5. The stock is trading in very high PE because of good ROCE and ROE. It has delivered consistent ROCE and ROE for last 3 years. The debt to equity ratio is around 0.06, which is almost nil. The company doesn't have any pledged shares, which is very positive. you see the sales growth of the company, it is around 30%, whereas profit is almost flat. If you see last 3 years ROE, it is around 22.8%, whereas ROC is in the range of 30%. So it has delivered consistent ROE and ROC for last 3 years. That is the reason why it is showing premium in PE. If you see sales growth for last 3 years, it is around 12%, whereas the profit has grew by 8.95%. Pitlite has given a return of around 229% in last 5 years, which is very good. That means if you have invested 1 lakh in Pitlite 5 years ago, it has delivered 3 lakh rupees, which is very good. Till now, we discussed 6 large cap in our Muhurat pick stocks. In our top 10, 6 stocks is from heavyweights and the rest 4 is from mid cap segment, so that you can generate profit at a good pace. So the first mid cap pick from electrical cable sector, that is Polygam. They are the market leaders in wires and cables. Polygam. Polygam is currently trading at a price range of around 2,698 rupees. It is having a market cap of around 40,000 crores. The stock is trading at a PE of 35.9, which is above the industry standard of 28.8. It is having a decent dividend yield of around 0.52%. It is commanding high PE because of good ROC and good ROE. ROC is in the range of 22.5%, whereas ROE is in the range of 17.3%. The debt to equity ratio is around 0.02, which means the company is holding no debt. The company doesn't have pledged shares. That is very good. If you see the sales growth, sales has grew by 27.1%, whereas profit has grew by 38.2%. If you see ROE for last 3 years, it is around 19.6%, whereas the average ROCE for last 3 years is in the range of 25%, which is very good. If you see sales growth as well as profit growth for last 3 years, sales has grew by 15%, whereas profit has grew by 21%, which is very good. Now let's see the Polygam's return for last 5 years. It has generated a solid return of around 312%, which is very good. The next pick is from consumer discretionary. The company is Nixon Technologies. They are involved in manufacturing consumer products such as mobile, fridge, TV, etc. Nixon Technology is trading at a price range of around 4,275 rupees. The company is having a market cap of around 25,369 crores. It is trading at a PE of 109, which is very high compared to the industry standard. Industry standard is around 51.8. The company is trading higher PE because of its huge future potential as well as good ROC and ROE. The ROC of the company is around 22.5%, whereas ROE is in the range of 22%. The company is holding a debt to equity ratio of around 0.37, which is very good. It doesn't have any pledged shares, which is another good parameter. The company is having a sales growth of around 42.2%, which is massive, and having a good profit growth of around 24.2%, which is very positive. If you see ROC and ROE over the last 3 years, company is having ROE of around 23.9, whereas ROC of around 27.2%. If you see sales growth as well as profit growth over the last 3 years, sales has grew by 53%, whereas profit has grew by 44%, which is very good. Company has given a return of around 674.37% over last 5 years, which is very good. The next Muhurat picks on mid-cap segment is IRCTC. It is a monopoly in railway ticketing, tourism, etc. IRCTC. The market cap of the company is around 60,000 crores. Currently, the stock is trading at a PE of around 71.7, which is same as the industry standard. The company is having a dividend yield of around 0.5, which is okay. The company is holding good ROC and ROE. ROC is in the range of 51.3, whereas ROE in the range of 39.9. The company is having almost negligible debt, that is around 0.06. And the company doesn't have any pledged shares, which is very good. Sales growth of the company is in the range of 178%, whereas profit growth is in the range of 208%, which means profit has doubled over the years. If you see ROE and ROC across last 3 years, ROE is in the range of 31.6%, whereas ROC is in the range of 42.7%. If you see sales growth over last 3 years, it is almost flat, whereas the profit has grew by 32.6%. If you see return over last 5 years, the company has generated a return of around 410%. So the last stock on the list is Varun Beverages. If you see the company snapshot of Varun Beverages, is trading in the range of 1013 rupees. Varun Beverages is having a market cap of around 65,000 crores. Currently, the stock is trading at a PE of 50.7, which is almost same as industry standard. The company is having a dividend yield of 0.25, which is okay. The ROC is in the range of 17.4%, whereas ROE is in the range of 18.6%. It is having a debt to equity ratio of around 0.49, which is okay. And the company is having a pledged shares of around 0.04%, which is almost nil. If you see the PEG ratio is in the range of 0.7, which shows the company have massive potential to grow. If you see sales growth over last year, it has grew by 52.3%, whereas profit has grew by 123%, which is very good. If you see ROE over last 3 years, it has grew by 15.8%, whereas ROC has grew by 15.2%, which is good. The sales growth of the company over last 3 years is around 20%, whereas profit growth over last 3 years is around 32.2%, which is very good. If you see return over last 5 years, company has generated a return of around 589.75%, which is almost 6 times. So if you have invested 1 lakh 5 years ago, it has generated 7 lakhs over past 5 years, which is very good.
Please do like if you like the video and don't forget to subscribe to get the notifications of upcoming videos on personal finance and stock market. Please post your valuable comments. Do follow the Friday Basics to make your stock market journey easy. Thanks for watching and have a good day.